I kind of blame Kevin Warsh for that. The idea that you should be terse in your statements and that you should limit the amount of communication and guidance. Well, what did you expect? If that is how you want to operate, you're going to see a lot of opinions out there because people are not going to be basing what they think on your words. They'll be basing everything on their interpretation of the future, including the short-term future. Look, the people who think that there are no rate hikes coming and that he will stay flat are probably the people who think the stock market's going to sell off and oil is going to sell off over the next 6 months. And that's a perfectly valid view to take.
But Dr. Wizman, what's so important here, and I'm sure you studied this across your effort at Harvard, the basic thing to me is this a hearkening to the past, or can he not get away with that because of modern technology? The speed of information. Alan Greenspan didn't have to worry about social media.
I think he's not going to be able to get away with it, not because of technology, but because he's going to be pressed to give information when he appears before Congress, when he's in the presser. And of course, you're going to have a bunch of other senior Fed staff say what they want to say at their appearances, and when they're asked to give commentary. So it's going to be difficult to keep a lid on what the FOMC says, regardless of what Kevin Warsh wants to do.
I don't think Paul will remember this, but Thierry, you and I are old enough. I mean, Waller was on the edge of Wayne Angel yesterday.
Exactly. So I'm looking at the WIRP function here, Terry, on the Bloomberg terminal. Almost 2 rate hikes kind of priced in here.
I did not know that.
Yeah, we're up there. It's 43 basis points by the end of the year. I don't know. Does that seem reasonable to you?
It seems a little bit too hawkish, but I do believe they're going to be raising rates. I believe it's going to happen at the latest in October. There's a tail there to maybe moving it into September. The only reason I would even I am entertaining October is because the personal consumption price index revisions are coming out in late September, and maybe Kevin Warsh might be able to convince the committee to wait until that data is out before making a decision on raising rates. But if oil stays high, if the stock market stays robust, if there is no decline in inflation, yes, I could easily see September, that is the meeting after tomorrow, when they raise rates.
We also have the Bank of Japan. What do you expect to happen there? Because I'm looking at the yen. I mean, Tom and I, we're kind of on a 165 watch here. I don't know.
Yeah, so the Bank of Japan has been very deliberate in their rate hiking or rate normalization process. They tend to raise the policy rate by about 25 basis points every 6 months, and that's been going on since 2024. If they continue to follow that pattern, you should not expect another rate hike until December. However, there were leaks last week about the prospect that the BOJ would accelerate the hike. So maybe they're going to do it in October as well. Having said that, up until now, their rate hikes have not done anything to curtail speculation against the yen. I don't think that's a reason to not hike. There are other reasons to hike, including the fact that real rates are negative in Japan. But if they sound too dovish at the meeting this week and dollar-yen rises overnight as a result, I would fade that move, because if that happens, I think they would conclude that they did not convey the right message, and then there is a risk of intervention in the market, either rhetorically or with actual FX intervention on Friday.
Thierry Wizman with us with Global Strategy. Macquarie, of course, all of Australia, and here in New York is well. Thierry, to bring it back to the Fed here, the elephant in the room to me is an elevated real rate. Ed Yardeni told me a couple days ago, he said, hey, rates are back to normal. Do you agree that we just got to get used to rates at this level because this was what it was like decades ago?
Yes, prospectively, but I would not say that the elephant in the room is real rates. I would say the elephant in the room is the fact that personal consumption expenditure price index on a core basis has been above 3%, or roughly around 3%. Forever. That is the elephant in the room. And I would highlight that, for those of us who think that Kevin Warsh is unwilling or has a penchant to offer no information, I would push back against that too. In his testimony before Congress a few days ago, he said something to the effect that divulged or betrayed his own tightening bias. He said that over the next few meetings, the committee would be examining the tools that it needs to roll out to control inflation. Given that, as I mentioned, core inflation has been running at 3%, you would think that that implies a tightening bias. I think the question is when. Today, no, not today. September, possibly. More likely October when we get those full revisions.
I'm looking at the DXY index, 101.61 here. I mean, Is there any reason to fade the U.S. dollar here? That was the call coming into the year until we.
Yeah, I mean, the reason to fade the U.S. dollar is that oil prices might come down if you get another memorandum of understanding between the U.S. and Iran. That I think would be the important driver, because one of the things that's been holding up the dollar all year has been high oil prices, and there's a very strong and valid fundamental reason for that. The U.S. economy actually benefits from high oil prices. We are a net exporter. And when the price of what you export goes up, it raises your real incomes in aggregate. Not everyone gets hurt, not everyone gets helped, but in aggregate, it benefits. That is economics 201.